Hello and welcome to the first episode of the Gspröch, a podcast from Wyden where we focus on the growing adoption of digital assets by banks and financial institutions. Gspröch is a Swiss-German word meaning conversation. So the name of this podcast reflects Wyden's roots as a company founded in Zurich and is also an invitation for our guests to engage in some lively and insightful discussion on the fast-growing institutional digital asset sector. My name is Stuart Peterson. I am the Chief Revenue Officer here at Wyden and also your host for the Gspröch. So, to commence proceedings, I would like to extend a warm welcome to our guest for this first episode of the Gspröch. René Langer, who is the Head of Trading Services at Luzerner Kantonalbank, LUKB, as it is also known, is a Swiss bank offering trading and custody of Bitcoin and other cryptocurrencies. In addition to his responsibilities for stock trading operations, René is also responsible for the technical implementation of cryptocurrencies at LUKB, which is part of the company's overall digital asset strategy. Thank you, René, for joining us today.
Thank you, Stu, for a great intro. Let's kick in.
Absolutely. Let's commence with some very engaging discussion. So, René, let's start with the big picture. What would you say were the key drivers for LUKB's decision to implement a digital asset offering, particularly given the implementation began long before the current buoyant market conditions that we are seeing today?
Yeah, we did market research since 2017. And in 2020, some crypto enthusiasts around Serge Carlot's fight for a project application within the bank. So actually, 4 years ago. So it was kind of a bottom-up movement within the bank. We were not on a strategic roadmap, but we saw that payments of our clients went to cryptocurrency exchanges. And so we thought, let's do it.
That's very, very insightful. So even though you said it was a bottom-up approach, had you had any customer interaction to actually ascertain if there was demand? Should you potentially offer a service like cryptocurrencies?
Yeah, we have seen clearly a client demand. We saw clients engage in crypto and they are asking for that asset class, but we were not ready to provide such a service. And clients ask for a safe place to custody cryptocurrencies, and especially the years after the FTX events. So it's shown that it's much clearer that need for the client to have a safe place for custodying their cryptocurrencies. And what we saw also from brokers like Swissquote, which showed there is also a business case involved. So we could really show to our management that is also a business case.
That's very good, because it's not just about allowing customers to be able to trade cryptocurrencies, but it's the safe custody of those crypto or those keys. And that's what the industry talks about, not my crypto, not my keys. So maybe you mentioned about the internal process. Could you maybe just provide some commentary or insights around what that internal stakeholder processing and engagement was that allowed this project to get going?
Yeah, we had luck that the right people were involved in different departments, like trading, like digitalization, like product management. Mm-hmm. And we have a great culture within the company to bring this idea up to the management, which trusted us and gave us budget for a pre-study. So that was really great. And please bear in mind, this was 2020. This was a completely different time as it is right now. So also on the regulatory side, things were not that clean, that clear as it is today.
That is very, very true. And I know you have been a very early adopter in the market and therefore innovative leader in terms of bringing an offering to market. So let's maybe move to the kickoff for this. So let's say now the decision to implement a digital asset offering has been made. Let's take a look at the pre-project phase for the moment. Once you had taken that decision, how did you then approach the project setup? And did you rely on purely internal expertise, or did you potentially have to source some external support?
After we filed for the pre-study, we relied on external consultants which helped us through the pre-study, and also a legal company which had a lot of crypto expertise. But during the pre-study and also during the implementation project, for us it was pretty clear that we have also a lot of knowledge within the bank, especially also in trading and also on the technical side. So for us it was pretty clear that we have to do the project by our own, so that we can really learn something also to interact directly with the blockchain. So that's why we have done it this way. And what we have done during the pre-study, just to mention this, we talked to 50 providers in several dedicated topics, such as trading infrastructure, custody, also AML, transaction analysis. We had also ETH Zurich involved in a market study. We talked to clients about the prototype, and we also designed processes. So it was really a lot of work during that time, and that's why the pre-study took us, I think, almost 1 year.
Thank you. And what would you therefore distill or conclude were the key considerations and therefore decisions around your technology and infrastructure setup? Especially, you mentioned a couple of times around, custody is important as well. So maybe the specific concept that you did with Fireblocks and how that then became integrated in the overall architecture and infrastructure.
Yeah, first of all, if you really would like to learn about the tech blockchain, I think there's no way around of crypto. You really need to interact and sign transactions on the blockchain. And you need an institutional grade custody provider, such as Fireblocks, which we assume as a market leader in that field. And for us, it was pretty clear that clients would like also to transfer cryptocurrencies to us. And in my opinion, this is only possible if you have your own custody. And that's why we have done it this way. And what was really also important, just to mention this, is the Swiss regulation. For us, it was pretty important that clients' assets are protected and that we don't have them on our balance sheet, so that clients can have it in their portfolio just as a regular share or bond or something. Mm-hmm. So it's a win-win situation for the client. Yeah. He has it in a portfolio, is protected by insolvency, and for us, it's not on the balance sheet. And this was really important for the management, also to continue not only from the infrastructure side, but have also the regulatory clarity on the other side.
So, did a lot of the timing of this project commencement, did it fit in with the confirmation of regulatory clarity, or did you have a lot of things set up prior to that confirmation of regulatory clarity? So maybe you could take us through sort of the timings from a regulatory perspective and the pre-study perspective.
Yeah, it was the time where the DLT regulation in Switzerland went into force. And so that was really important. So we had the banking law, which were pretty clear. So, and for us, it was really important that we had this clarity. I think otherwise our management would not have allowed this project to keep going.
Which has answered my next question around would the project have got going if there wasn't that regulatory confirmation. So thank you very much for answering my next question. So, but let's just take a different perspective on this. Now, if we zoom out for a second and look at the big picture, implementing a digital asset offering is a major step forward for a traditional Swiss Kantonalbank, and surely a successful project that others can actually learn from. What would you say were some of the lessons LUKB learned, such as, for example, lessons learned in terms of vendor technology and selection, project management, business models, and maybe most importantly of all, the maturity of the entire digital asset industry and ecosystem?
Actually, we have invested a lot of internal knowledge, as crypto or digital assets is pretty new. So we have to emphasize on education about our management, about our relationship manager and compliance. So just to give you some insights, we educated 400 relationship managers about crypto. So this is really significant. And mostly we learned really a lot from directly interacting with market providers and really to go really forward to do custody by our own. And in such a process, this takes a lot of time. Yeah. But the infrastructure is the foundation to build something. Yeah, like a house. You start from the ground, and therefore the most important part is the infrastructure you have in place, such as Wyden and Fireblocks.
And so this is digital asset. It's a relatively new concept that we all believe will become pervasive, both in terms of offerings and technology infrastructure for the future. Were there any new best practices within the bank that you had to develop? And I think on that note also, what would you say were the main differences in architecture, technology, infrastructure compared to the TradFi world of maybe FX or equity and those TradFi standards we've had for many, many years?
We went for a proof of concept, which was really significant. So we showed our management that the infrastructure really works. We were able to send orders right in the implementation phase, so on a productive environment. So, and yeah, this was really, really important.
I think that's what we hear from the market, that you've got to ensure that everybody is on board. There are the right standards, processes in place, not just across your infrastructure and technology, but also, across enabling people who work for the organization to be able to understand and convey their understanding of digital assets, and particularly as a bank, how it can offer customer protection, how it can offer customer opportunities, but most importantly from a bank perspective, it is generating revenue, but B, it's doing so within a regulatory agreed framework.
Yeah, so I can completely agree.
Thank you. So we've kind of approached this discussion from the internal LUKB perspective, revolving around the actual implementation project of the digital asset technology components that are required to build out your service offering. But now, if we take this approach and discussion to the external launch, what has been LUKB's go-to-market approach for its customers and its market in Switzerland?
Yeah. At the beginning, we were pretty quiet in terms of marketing and communication during the implementation phase and pre-study phase, just to see how the project is going on. Also, we needed to do our homework in preparation for the application for FINMA. And therefore, as things were clearer, we decided that our partners, such as Wyden, can communicate our partnerships last year. And so we had that proof of concept phase. We had the rollout to certain members of the project team, where we went public, and afterwards we rolled it out within the bank. And afterwards, after we had the final go from FINMA, we were really able to roll it out to our clients. So, and since our public launch in March, which was some weeks ago, we are out with our marketing campaign. And for us, it's really essential that we say that we do self-custody and trading our own, since it shows our strength and also our knowledge we've gained over the last years.
Thank you very much for that. The whole Wyden team, we've been very much looking forward to this launch. So since the launch in March, publicly, what has been the feedback from your clients and market so far?
Yeah, the feedback was pretty good. The clients love to trade 24/7, which is really amazing. So we see people of all ages trading day and night. So it's really cool. We emphasized that our UI is pretty smooth and clean, that clients can click in, trade in 3 clicks. So we can provide an RFQ, so they are pretty sure at the beginning what price they get. They can have it money-driven. They just say, now I would like to buy a certain amount of BTC and then Ethereum with a certain amount of Swiss franc or any other G10 currency within the bank. This is also really great for our clients.
Yeah, absolutely. And has the client feedback been not just around the trading, because this podcast talks about how you have approached providing and building the right offering for your clients to give your clients the confidence that you can provide a secure digital asset service. How important has the sort of custody side been? Because over the last few years, there have been quite a few blow-ups where, assets, you're not really holding your assets, right? Your assets are being held on an exchange somewhere. And, you then have to, if you want to bring them off, you have to bring them off yourself. It can be quite an arduous process if you have not been, heavily involved in this market for a number of years. And also, then you need to be able to self-store them in a digital wallet. How important do you think the ability to give customers the confidence that their assets are being looked after in a secure way and they are, completely segregated from, those market conditions and some of those traditional experiences that we've had over the last couple of years?
I think it's the most important thing. We are a universal bank and our clients trust us. We were founded in 1850, so this is a 175-year history almost, and we have a really a solid bank here, and we are focusing really on a safe place to custody cryptocurrencies. And for us, it's really essential that we have not additional layers of risk above that. So that's why we are trying. That's why we do self-custody with Fireblocks. And so we had a lot of analysis to be done from the operational risk side. We had to think about every risk which could be evolving in different setups. We had a lot of audits, internal or external. So in a bank, I think it's a completely different setup from other startups. And if you do crypto within a Kantonalbank, everyone looks at you and says, yeah, you have to do it right so that you have still confidence providing that service to the client.
Yeah, I think that's very, very important. It's always been about the trust parameter, for a bank. A bank can offer its products and services and allow it to monetize them. But, if we look at the traditional, view of a bank on the monopoly board, it is about the custody. So the custody and the safe haven of those assets and the ability to then allow customers to utilize products and services to increase wealth from those assets, I think is very, very important. And I think what has happened with what LUKB has been doing is being a trailblazer in the industry for being a bank that has a long history that is bringing a digital asset offering to market and successfully being able to launch and to take advantage probably of the upturn of the markets. Now we seem to all be coming out of what has been affectionately known as the crypto winter. From that perspective, and that's been extremely insightful, René, given all the work involved, it's obviously been very, very rewarding to know the project is now successfully up and running as part of the everyday operations. And huge congratulations, by the way, to you and the whole LUKB team for achieving this milestone. But as we're starting to come towards the end of this podcast episode, are you willing to share maybe some insights into LUKB's future digital asset roadmap and strategy?
Yeah, so far we are providing the service to Swiss clients only. But we are not only focusing for retail clients, we are also focusing for institutional clients, since our setup is institutional grade. So we will continue to expand our offering. We will build interface APIs so that institutional clients can send us orders or do custody with us. We will introduce a DCA plan where our clients can put in money on a regular basis. And for us, which I think is the most important thing, we will roll out transfers of cryptocurrencies that clients can transfer crypto to us, we will do this in a smart and slowly manner in order to ramp up our processes. Clients can already approach us, reach out to LUKB, and we put them on the list for the transfers. So I think this is really important, so that client can really approach us and custody assets within the bank. So I think from a diversification perspective, not to only have cryptocurrencies on a hardware wallet or on an exchange, I think there is also a place for a LUKB to offer such a service.
That's really insightful and great news. And do you see the growth of institutional adoption accelerating, where you are providing services to your institutional clients in addition or alongside your retail client base?
I think, especially with the ETFs this year, it will take some time till digital assets like Bitcoin or Ethereum will be part of an asset management solution. But in my opinion, the path is clear forward. In 2 to 3 years, in my opinion, every bank will have access to crypto or provide access to cryptocurrencies, and they will start with white label solutions, and they will go to self-custody as we have did. I think the development will be on open protocols much more further. I think private blockchains are kind of dead, and it's interesting to see what's happening on the technical side, on layer 2s or privacy. We will be also on the front line to learn about that. So I think interesting times ahead, and we have that infrastructure, and we will continue to evolve.
Yeah, thank you for that, Darwin. That's very interesting. And if we sort of knit this back to the traditional or TradFi marketplace, because of your knowledge now as a bank and as the team that have built this from scratch, learning about blockchain, the different layers, learning about custody, self-custody, the ability to offer those services, transfers in, transfers out, different kind of trading models. How long do you see before we start to effectively tokenize the traditional finance industry, right? Where today, you buy and sell an equity and you still have a T+2 vapor trail, even though you can buy and sell within 10 minutes. So the ability to actually rewire the traditional finance asset classes, whether we've had pretty much the same protocols for the last 50 years. Do you think that adoption will accelerate now that there has been some regulatory adoption of digital assets, mostly around Bitcoin and Ethereum, but it's also being able to use them as use case or proof points that the technology actually is working and it can work within regulated financial institutions?
Yeah, great question. I think personally, tokenization will start for digital assets or like regular shares or bonds, something which is really digital. And what is really important overall, it needs to reduce risk or it has to improve efficiency. If this is not reached, then blockchain is probably not the right solution to do it. Since also in trading is really smooth right now. Since we have the fixed standard, everything is STP, also settlement is STP. It's a really large hurdle to jump over it to have it on a blockchain. Also, we have pooled settlements. Sometimes it's really hard to have an instant settlement, since you always have to pre-fund on their side. So there are a lot of hurdles to jump over it. So far, we have on the tokenization side not these standards as we have in Swift. We haven't even decided which protocol to choose, like Ethereum or something else. So I think it's a long way to go. We need to solve the privacy issue, since I think larger institutions or banks, for them, it's not a solution that you can have really every transaction to have it open on the blockchain. So I think this will go on layer 2s. And as you see, this will take in my opinion, some time, 5 to 10 years, maybe. Maybe it's all faster. But as the whole sector, I think much more companies like LUKB should really go and interact with open protocols where you can really learn and to build something about that. And we should really engage into it and to build an infrastructure where we can really have a bright future for digital assets. So everyone should listen to it. I think if we could really scratch the CSD, the Central Security Depository in the future, which would really provide efficiency in the overall process. But I think it's just a long way to go from here. So that's why we have to start with crypto.
Absolutely. And we're very happy that you are starting and the industry is starting with crypto. And I think thank you very much for that amazing insight, René, and commentary. And I think that brings us nicely to the end of our first episode of the Gspröch. I think we've achieved our goal of generating some extremely interesting and insightful conversation around LUKB's decision to implement a digital asset offering and how that offering was deployed both internally and externally. So a big thank you to our first guest, René Langer, for sharing your experiences and insights. We're looking forward to bringing more episodes of the Gspröch in future, featuring discussions with expert guests on all topics related to institutional digital asset adoption. To make sure you don't miss any of the upcoming episodes, please make sure to follow us on YouTube or Spotify, or both if you prefer. If you've enjoyed this episode, please also feel free to share with your colleagues. Once again, I'd like to extend my sincere gratitude to René for being part of this first podcast edition of the Gspröch. And until the next one, it's goodbye for now.